Hey everyone, welcome back to Corporate Decoder, the place where we learn to read between the lines of corporate filings and figure out what's really going on, because sometimes big deals are just really big deals and other times there's something much more. Today we're diving into BGSF Incorporated's latest report. Now, this isn't your typical quarterly update. This is a big one signaling a major change for the company. We're talking about a pretty significant sale, a real shifting of gears and what that means for their cash and their operations. Before we dive in, if you're new here, make sure to subscribe so you don't miss these decoding sessions. And hey, if you want to join a community of fellow financial sleuths, our Discord link is in the description below. So what's the big news? BGSF, or the company as they call themselves here, has officially completed a major transaction. You might remember them filing some initial reports about this back in June of 2025. It's essentially a sale of a big chunk of their business. In simpler terms, they sold off their professional division and their finance and accounting business. This big sale involved transferring certain assets and liabilities, selling equity in plain English, selling off parts of their company. The buyer, INSBYR Solutions, paid a hefty sum for this, a cool $99 million in cash, though there might be some adjustments. Now, $99 million is a lot of money. What did BGSF do with it? Well, the filing tells us that right away they used a good chunk of that cash to pay off their debts. Specifically, they cleared all outstanding amounts on a credit agreement, which was around $43 million. This is a pretty smart move. When you sell a business, you often get cash in, and paying off debt reduces your financial risk. It's like getting a big bonus and immediately paying off your mortgage. They didn't stop there. They also paid off another debt, a convertible subordinated note worth about $4.4 million. So in total, they used a significant portion of that $99 million to get their balance sheet cleaner, getting rid of these financial obligations. This tells us they're prioritizing financial health and reducing the burden of interest payments. This whole section we're looking at is all about the completion of this asset disposition. It's the filing that officially confirms the deal is done and dusted. To make sure everyone knew, on that same day, September 8th, BGSF put out a press release. This is standard practice, letting the public and the market know about major corporate events. Now, this is where it gets interesting from a financial analysis perspective. The filing points to something called pro forma financial information. Think of pro forma as what if. It's showing us what the company's finances would look like after this sale. They've included statements for recent periods, like the first half of 2025 and the past few years, as well as a balance sheet as of June 2025. Looking at these pro forma financials, we can start to see the shape of the new BGSF. They've essentially streamlined the company, focusing on what remains after the sale. These numbers tell the story of a company that's becoming more specialized. Their main stock, traded on the NYC under the ticker BGSF, represents ownership in what's left. The sale of these divisions means that the future performance of BGSF will hinge on the businesses they kept. And finally, we see the signature from Keith Schroeder, who's wearing multiple hats as interim co-CEO, CFO, and secretary. This is often a sign of a company in transition, potentially looking for new leadership or optimizing its executive structure after a major event like this divestiture. Now, let's talk about what this all means. BGSF has effectively shed some of its business units, bringing in $99 million and cleaning up its debt. This could position them for a few things. Firstly, it might mean a more focused strategy. They're now concentrating on the remaining parts of their operations, which hopefully are the most profitable or have the most growth potential. Secondly, with less debt, they have more flexibility. They can invest in their core business, pay dividends, or even explore new acquisitions without the weight of significant financial obligations. However, we also need to consider what was lost. By selling off the professional division of finance and accounting, they might be losing out on diversification. If those businesses were stable and profitable, BGSF has now reduced its overall revenue streams. The key here will be whether the remaining businesses can pick up the slack and grow significantly. It's a classic business strategy. Either become best in class in fewer areas or try to be good at many. BGSF has clearly chosen the former. The $99 million in cash is a significant asset. How they deploy this cash moving forward will be critical. Will they reinvest it in their existing operations to drive organic growth? Will they look for smaller, more strategic acquisitions that fit their new, leaner profile? Or will they return some of it to shareholders through buybacks or increased dividends? The market will be watching closely. The fact that they used a large portion to pay down debt is prudent. It shows a management team that understands the importance of a strong balance sheet. This reduces financial risk and makes the company more resilient to economic downturns. By the way, if you're finding this breakdown helpful, give this video a thumbs up. It really helps us reach more people, and don't forget to join our Discord community for more in-depth discussions. Looking at their overall direction, BGSF seems to be aiming for a more streamlined and potentially higher margin business. The success of this strategy will depend entirely on the performance of the divisions they've retained. Are those the growth engines of the future? The pro forma financials will give us clues, but ultimately it's about execution. A key risk here is if the divested businesses were actually the more stable cash cows, leaving BGSF with more volatile or less profitable operations. To wrap up, BGSF has made a major strategic pivot, selling off significant portions of its business to get leaner and financially stronger. The $99 million infusion and debt reduction are positive steps, but the company's future success now rests squarely on the shoulders of its remaining operations. It's a bold move, and we'll be keeping a close eye on how this new focused BGSF performs. Alright, that's our decode of BGSF's latest filing. What's your take on this big sale and what it means for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.